Good morning, everyone. Welcome back to the Rational Investors recap of our daily brief offering. I apologize. I was away yesterday. A big moving event here for myself. I have to relocate by the end of the month here. So we'll try and do a recap here for you today. I think I'm going to be MIA tomorrow because more big move event day coming up tomorrow. But should be interesting once that's done. We can get settled into the new digs, and we've got a big TRI meetup coming up here in Vancouver next week. So it should be lots of fun interacting with the crew live here. So it's about quarter past the hour right now. Let's try and just give you a quick update of what I see happening in the market. Not a heck of a lot of change, other than the fact that I do see the US dollar here index itself trying to break out through the top of this wedge that we've been talking about for quite some time. I'm a little leery about this because, as I said before, we do have a big fundamental driver event coming up here with the FOMC meeting at the end of the month, and it's highly anticipated that they are going to be lowering interest rates. That could, in essence, be being priced into the market now, where they can bid the US dollar index up, and then this almost becomes like a buy the rumor. And then on the actual event, yes, they did cut rates, sell the news, and down goes the US dollar index. Either way, I think it's extremely dangerous to place too big of bets ahead of this event. And we have a general rule that says try and at least wait an hour following the Fed announcement itself before making any sort of decisions about direction. And now they have like an actual press conference following the news event, the FOMC event. So as a result, the press conference in itself gives you that hour to let the market sort of settle down. And once the press conference is done, then we can start looking at the market and sort of deciding where they want to take things. I think on balance, the big drivers right now, ahead of this fundamental event, I think it's dangerous to assume any drivers out of the US. I think the big drivers right now and what's driving US dollar up in earnest, of course, is everything about Europe. We did have the euro actually break pretty hard here a few days ago, and that was sort of one of the reasons why this thing started to take off in earnest. We're creating another down day, very wild price action, creating massive wicks and massive tails right now. We are coming up against a key support here, so it's understandable that some traders are just going to simply buy a test of these lows and expecting this to be a trading range. I also did see sort of across the news wires, and of course, we've had a pretty negative sort of view on the British pound for a while, but if I understand correctly, there's quite a bit of wranglings with the new prime minister in the UK and how they're going to handle this Brexit issue and how Ireland gets handled with all of this. But on balance, this general sentiment is that business conditions are getting worse in Europe, not better. So it doesn't surprise me to see money flowing out of things like the British pound and the euro. As well, specifically with regard to things like the euro, we actually had news today that Draghi and a lot of the central bankers in Europe are in favor of even more sort of what their version of quantitative easing. On top of the fact that business conditions are relatively weak, I did see like German business confidence came in at just a horrifically low level. We've been watching things like PMIs out of Germany and Jamie's reports on fundamental drivers out of Europe recently, and they just look like a train wreck. So really, it shouldn't surprise us that the central bankers in Europe are expounding the idea of lower interest rates, negative interest rates, quantitative easing, punishing people for saving money, and that trend just it seems to just go on at no end. Interesting to watch the fear proxies that we like to keep an eye on. I've got on this chart right here, both the gold and in the teal silver. I think in the little recap video we did the other day, we were talking a little bit about things about like rising wedges on the gold market. And this is, by definition, actually a bearish chart pattern. So we're getting a bit of a break here. And frankly speaking, if we are expecting higher US dollar index, then we should see a weakening in the euro, or excuse me, in the gold. Do have some cheeky gaps, big old gap right there on the gold right there. Also another gap down here at about 1282. And there's also cheeky gaps way down here, down in the sort of 1200 area. So as I've said repeatedly of late, very bad place for me to be thinking about buying gold. I do like gold names, and there are a few interesting gold stocks that meet sort of fundamental criteria drivers. But I couldn't really be a buyer of gold itself right here. And then on the flip side, good old silver, same sort of thing. I mean, I'm hearing a lot of sort of public rhetoric now. Oh, silver's a bull market. Oh, silver, you got to buy your silver, 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 silver. That, unfortunately, to an old timer like me, is actually a little bit of a warning sign. But nonetheless, there is that silver chart. No real signs of a top yet, per se. You'll notice that silver does like to do these V tops, though. This can get extremely violent here. So my hunch is we're probably just going to be watching this sort of push in gold. If gold starts to roll over in earnest, my hunch is the silver will probably join suit. But as I had said just a moment ago, we don't really have anything that's actually like quote unquote tradable off of this. It's straight up. We made higher highs and just a big down day today. It'd be interesting to see if we get any divergence or anything develop through this. That will be sort of our tell that, okay, maybe we're ready to come back down. And then, if we are looking for places to come back down, just like we said with the gold, there's lots of gaps on this chart to be filled in. So it's not today, absolutely not today. But, especially following that Fed meeting, could we see the silver market calm down here a little bit? To me, that seems perfectly logical. All right, so I just want to take a quick boo at the gold and silver. I don't see a trade here today, but, we've been watching this very closely as we head closer and closer to this Fed meeting. A couple other fear proxies, and it's interesting how both Bitcoin and the U.S. Treasury market. So Bitcoin is the line chart, the orange line chart, big old M. Of course, we talked about that. What are you ever supposed to think if you see the market smiling at you? You can see that that's put in a bit of a top here. Right? I don't think that should surprise anybody. The Litecoin halvening event has now been priced into the market, and we probably will get that fundamental event happen here. I can't really see the market breaking and collapsing until that event is done. And back in like 2015, what had to end up happen was the market would come up into the halvening and then top out and then break. And as we're coming out of the summer and into the fall, that's when the market sort of officially breaks. I could see the same sort of thing here with crypto and Bitcoin. Wouldn't be surprised some back and forth here. And, just like the treasury bond market, right? If we, well, why don't we'll look at the bonds first. So there's the bond market. You can kind of see this thing's looking very fractally, right? So shoulder, head, shoulder, right? Do we crap out through the neckline here? If we do, then that means all of this area needs filling in. But the interesting thing there is, what does that imply? Like bond prices will come down if they fear that inflation is coming into the system. If the Fed, of course, errs on the not lowering interest rates or maybe even raising interest rates, then that should theoretically quash inflation fears, which ironically enough, I think would push bond prices higher, which would force that inversion of the yield curve. Ironically enough, if the Fed actually comes out and lowers interest rates, that might open the gateway for that sort of inflation talk, and the market feels as though growth can get going again, and we might see the bonds break hard. So I suppose the scenario would play out well for the bonds, and of course keep in mind that this would be bad for bond prices, good for bond yields. if the Fed doesn't raise rates or even cuts rates, and we see sort of a massive explosion higher in the stock market, and a melting down of these bonds, and interest rates start going back up off the long end. But, we've talked about this lots in our recent videos on the site. The correlation between something like the bond market and something like Bitcoin as sort of fear assets, I think there's a heck of a lot of correlation. So I'm going to be following, I'm going to be following closely the gold market, the silver market, the bond market, and the Bitcoin market. And I think all four of these are moving in conjunction. And long and short of it here is I can't really make a big decision about any of these markets until we get on the other side of this Fed announcement date. And then we should see some resolution of all this consolidation that we've seen over the past few weeks. Probably the final thing we should talk about, just a quick boo. Mr. Monks and his auto manufacturing company, hearing that they kind of missed numbers here recently, so not a big surprise the stocks come off. But I'm looking at a weekly price chart here, and interestingly enough, there's a lot of stuff that we teach on the site and in the course that really it just jumps out at you on this. First and foremost, kind of like what we showed you in the in other markets. But what are you supposed to think if you ever see the market smiling at you? So you can see we broke through these lows, which in essence confirms this massive weekly smile. So a little bit dangerous. I'm not going to sugarcoat it. This is if anything, if you're a bull, you got to show me, right? I'm from Missouri. You got to show me. So what that means is I sort of, we've got the dump. The dump confirmed the break. We've checked the original dump level right there. If this was still a range, then we should resolve back up through here and head back up into good old reload short zones. As it stands right now, you can sort of see that the most recent low was not a W, it was a V, and the most recent high was not a W, it was a V. So in essence, we've got basically a nice little ping pong match right here. And really for the time being, I would say, the Tesla enthusiasts, you basically have a trading range. There's the top of your trading range. There's the bottom of your trading range. Probably going to zip around in here. And the problem, of course, is that the reason why this stock's coming off as it is, they recently released earnings, if I'm not mistaken, and they didn't do too well. So that's going to be tough, right? And we've talked about this. Is the U.S. stock market, is the U.S. economy actually going to go into recession, or is this just going to be purely an earnings recession, i.e., companies aren't doing so well? I'm leaning towards this sort of earnings recession scenario. And this is a good example where it may not be that the actual economy, yield curve inverts, all that kind of stuff. It may just be that, you can see all the open air here. There's lots of air for this thing to fill into the downside. And interestingly enough, today's price action has created a gap. So my hunch is get ready. This is going to be a wild trading range. And, even the sharp traders should be able to make some money off of this range. So, at best, if you are a Tesla fan, we're going to have to be watching reload zones. Notice that the reload zone lines up nicely with all those gap levels. So we're going to have to be watching for a test down into this area for a potential buy window. And with the violent gap lower today, this might be like a gap and go, which means that we may be like something like there to there. And then if we break the lows tomorrow, then we're probably looking like somewhere there to there. So you can see, for those people that are interested in Tesla and the alternative fuels, let's keep a really close eye on $195. That's probably a level that we want to watch. We're at 227 now. There's no hurry here. And then let's see how she acts as we come into there. So something for you to think about today. Okay, I have no idea how long that was. Hopefully it wasn't too long. Have yourselves a great day, everybody. Try to play from a position of strength. And of course, we got big Fed meeting coming up next week, and that should be our catalyst to drive trend going forward. All the best, and bye for now.